James Tynion is a partner at Foley Lardner, where he is co-chair of the energy industry team. He has specialised in renewable and alternative energy transactions for the past 20 years. Jim, how do you see the outlook for alternative energy deals for the coming year?
Well, thank you, Jane. What we see in the renewable energy sector, which is a very small sector of the broader electric industry and power markets in the United States, is an increasing rate of financings and M&A activity for the fourth quarter moving into 2014, which is driven by a couple of macro factors. In the wind energy space, there is a federal production tax credit. The eligibility period ends at the end of December 2013, which means that anyone who wants to take advantage of this tax credit, a developer of a wind energy project, needs to commence construction by the end of this year. What that has, the benefits of that tax credit are driving a lot of developers to reach out to the bank markets and or the M&A markets to bring in extra capital to start those projects. We think that activity will be very robust for the fourth quarter, and we think then that will lead into a lot of refinancings, term financings, and more M&A activity in 2014 in the wind sector in particular.
Okay. Now, you've also suggested that we could see some more divestments from large companies which have smaller renewable energy units. What kind of activity do you see there?
What we're seeing is since 2005, 6, 7, especially in 2000 up till 2008, there were institutional investors and regulated utilities who were supporting investments in wind and solar projects. A lot of the money is looking to get out of the business. That phenomenon compared with tons and tons of capital waiting to be deployed, the cost of the new capital that's waiting to come into the renewable energy markets, it's much lower. So we're seeing a pressure on sellers to basically turn over those projects. And that, at the same time, there are many regulated utilities that have invested in unregulated wind and solar assets where the shareholders and state regulatory bodies are not giving those regulated utilities the proper credit for having those things on their books. So we're starting to see large electric utilities looking to divest their portfolios. We're also seeing the oil majors. For instance, British Petroleum, BP, this past summer put out onto the market over $1 billion worth of its wind energy portfolio, trying to test the market on the appetite for buying. They ultimately withdrew that portfolio from the market, but we think they will be coming back out for divestitures. Edison Mission in Los Angeles is also going through a bankruptcy restructuring, and they're out in the market right now with their natural gas assets as well as their wind portfolio. The wind portfolio is over 1,700 megawatts, so it should garner a lot of activity for this large divestitures.
Right. Now, if you mentioned renewable energy is a very broad space. Which sector within renewable energy are we likely to see the greatest growth or presents the greatest potential for growth?
Well, for the last 10 years, wind has been the dominant growing sector within renewables because of demand, increases in technology, and a maturity within the developer class. The new build for wind will probably slow down over the next couple of years, while there's a long pipeline of people building. The explosive growth for the next 10 years will be in solar. And we think all three parts of the solar business, whether it's residential solar, the construction and distributed energy markets where there are corporate customers for rooftop solar, those kinds of projects, as well as the larger utility scale. We think that solar energy is becoming more acceptable to mainstream America, as well as all of the different financial markets. So we're going to start to see securitizations, retail, similar to credit card receivables and automotive receivables, securitization transactions are going to start to appear in the market. There are two right now that are floating around that could come to market in in the fourth quarter of this year, but there'll be several more in 2014. And we're going to see a lot of M&A activity and financings in 2014 for solar. And that should grow for the next 10 years.
Okay, thank you very much, Jim. That was James Tynion of Foley and Lardner, and I'm Jane Searle for The Deal.